If you earn £50,000 a year, you don't actually take home £50,000. The taxman takes a big chunk before it even hits your bank account. But here's what most people don't realize. The UK tax system isn't designed to be confusing, but it sure feels that way. And not understanding it could be costing you thousands. In this video, I'll break down exactly how UK tax bands work for the 2026 to 2027 tax year, how much you actually take home at different salaries, and one hidden tax trap that catches high earners completely off guard.
Let's start with the basics. Income tax is the tax you pay on your earnings. It funds everything from the NHS to roads to schools. Everyone in the UK gets something called a personal allowance. For 2026 to 2027, that's £12,570. This is the amount you can earn completely tax-free, 0% tax, nothing. Everything you earn above that personal allowance is taxed in bands. And here's where people get confused. The bands are marginal. That means each portion of your income is taxed at a different rate. You don't pay 20% on everything once you cross the threshold. You pay 0% on the first £12,570, then 20% on the portion above that. Let me show you the actual bands for 2026 to 2027. Band 1, 0 to £12,570. Tax rate, 0%. This is your personal allowance. Band 2, £12,571 to £50,270. Tax rate, 20%. This is the basic rate. Most people in the UK sit in this band. Band 3, £50,271 to £125,140. Tax rate, 40%. This is the higher rate. Band 4, above £125,140. Tax rate, 45%. This is the addition.
Now let's look at what this means in real money. If you earn £30,000 a year, here's the breakdown. The first £12,570 is tax-free. The remaining £17,430 is taxed at 20%. That's £3,486 in income tax. Your take-home pay before national insurance is about £26,500. If you earn £50,000, the first £12,570 is tax-free. The next £37,700 is taxed at 20%. That's £7,540 in tax. Take home before NI, about £42,460. And if you earn £100,000, you lose your personal allowance entirely. Yes, you heard that right. For every £2 you earn above £100,000, your personal allowance is reduced by £1. By the time you hit £125,140, your personal allowance is gone completely. This is the hidden tax trap I mentioned. It creates an effective tax rate of 60% on earnings between £100,000 and £125,140. 60%. That's not 45%, it's 60%. So someone earning £125,000 doesn't just pay 45% on the top portion, they pay 45% and they've lost their £12,570 tax-free allowance. That's a massive.
Now, there's also national insurance to consider. For 2026 to 2027, employees pay 8% on earnings between £12,570 and £50,270 and 2% on anything above that. Employers pay 15% on earnings above £5,000. So your actual take-home pay is even lower once national insurance is factored in. So, how do you legally reduce your tax bill? Here are 3 legitimate ways. First, use your ISA allowance. £20,000 a year can grow completely tax-free. No income tax, no capital gains tax. Second, increase your pension contributions. Pension contributions are tax-free up to £60,000 a year. This reduces your taxable income, which can pull you down into a lower tax band. Third, if you're self-employed, claim every legitimate business expense. Office costs, travel, equipment, software, these all reduce your tax.
Let's recap. Everyone gets £12,570 tax-free. The basic rate is 20%, the higher rate is 40%, and the additional rate is 45%. The bands are marginal, so you only pay the higher rate on the portion above each threshold. The £100,000 tax trap creates an effective 60% rate, and you can reduce your tax bill legally using ISAs, pensions, and business expenses. Thank you for watching. If you found this helpful, please hit the like button, share this video with someone who needs to hear it, and subscribe for more. New videos every Tuesday and Friday. See you in the